Hello traders, you're welcome to this video and I welcome you back to the Forex Geek channel. In this particular video, we are going to be discussing a trading strategy that focuses on one of the most interesting times in the market, and that is specifically the turn of the month. So we're going to be discussing a strategy that focuses on the turn of the month. So if you have ever noticed increased volatility at the start or end of the month, then this video will explain why, all right, and how you can take advantage of that volatility with the right strategy. Now, basically, the turn of the month trading strategy is all about timing your trades around the beginning and end of each month. Okay, where market dynamics shift due to institutional rebalancing, portfolio adjustments, and economic data releases. So, if you want to optimize your entries and exit points, then stick around as we break it all down. And of course, don't forget to like the video and subscribe for more trading insights. Now, the turn of the month strategy is built around a period of time where market activity tends to surge. This is because large institutional investors, mutual funds, and pension funds, they often make adjustments to their portfolios. Now, I'm just going to be setting the period separators so that we can pay attention to the monthly differences. This is having 13th January. This is 20th January. Okay, let's look for monthly differences. This is 1st November, 2nd December. Okay, so here we're having differences of 1 month. From here to here, we have a period of a month, and from here to here, we have a period of a month. All right, so the adjustments that happen, from institutional investors, mutual funds, pension funds, and all, they can cause sudden shifts in the market price action, especially when it comes to stocks, commodities, or forex pairs that are tied to major economic events. And it's also a time when new economic data like employment numbers or central bank meetings can affect market sentiment. All right, so why does this matter for us as traders? Well, these sudden moves can present profitable opportunities, but they also carry risk. And this is why having a clear strategy around the turn of the month is key. Now, to successfully use the turn of the month strategy, the first thing you need to do is identify the right time window. Typically, we are looking at the last few days of the month. For example, let us just look at a couple of examples around here, right? So this was December 2024. So we should be talking about the last few days of December 2024. In this context, we're going to be looking at the last few days of November, and in this, going to be the last few days of October. Okay, so when you consider the last days of the month, all right, you look at price activity during that window. Okay, during this time, liquidity increases and there's a heightened chance for rapid price movements. Okay, but how do we spot the exact movements, or rather the exact moments to trade? Well, the turn of the month usually triggers shifts in market sentiment. Okay, for example, if the last days of the month show a trend reversal, right, it may continue into the first few days of the next month. For example, let's just use this very practical example here. We can see that towards the end of October 2024, we had a trend reversal, right? A trend reversal beginning. This was a bearish trend, right? This was a bearish trend that we had around here. And then just towards the end of the month, we had a bullish reversal that began, right? And just as the new month commenced, we actually had that reversal continue for a few days. We had it continue for 3 days to be specific. We had this candle, this candle, this candle. You can see that they were consistently, going in the upward direction before we now finally had a breakout to the downside. Okay, so this actually presents a prime opportunity for you to jump on the momentum early, as trends can form quickly during these periods. Now let's just talk about how to confirm the trends during the turn of the month. All right, so while the timing window is important, we also need to use technical indicators to validate that a trend is forming or that momentum is building. So the first thing we're going to be looking at is the moving averages. I'm just going to add the moving averages to the chart, both the 50 period moving average and the 200 period moving average. Okay, I already added the 200, so I'm just going to add the 50 period moving average. Okay, so the 50 period moving average and the 200 period moving average can help confirm the overall trend direction of the market. So if the 50 period moving average crosses below the 200 period, for example, that is a clear sign of a downtrend. On the other hand, when you have the 50 period cross above the 200 period, that is a clear sign of an uptrend. Okay, and the second indicator we're going to be looking at is the relative strength index, or the RSI for short. Okay, so if the RSI is showing overbought or oversold conditions around the turn of the month, it can indicate that price movements are about to reverse or continue in the direction of the current trend. In this scenario, we can see that towards the end of December 2024, we can see that the RSI dropped to the oversold zone, just the tip of it, right around the 30 level. And you can see that the RSI started curving back upwards. So that showed that a reversal to the upside was about to happen. Perhaps there was a change in market sentiment or something of some sort. So we can see that as the new month was about to begin, it was beginning with a fresh trend, right, to the upside, even though that this was more like a short trend, right, because this was just a couple of days. Yeah, this was just a few days. This was the first day of the new month, right? The first trading day, this was the first trading day of the new month. So it was a bearish day, and then the very next day was a bullish day, and the next day also was a bullish day. So the reversal happened for a bit, and then before we had a downside again. So this was basically a consolidation phase. This was a consolidation phase, even though we saw a significant upside move here at the very start of the new month. Okay, another thing to pay attention to is support and resistance levels. So you have to look for significant support and resistance levels that are being tested around that time, right, around this time. So in this context, we can see that we had a significant resistance. Okay, if we take this here, we can see that we had multiple rejections. This was a rejection here. It was a rejection, another one, here again. So we have a significant resistance around here. And as the new month was starting, you can see that as the price got to that significant resistance, it got rejected, right? So that resistance served as an important level, showing that it might be difficult to break past immediately. And even after a few weeks, we can see that another rejection happened around that same resistance. Okay, so by combining these indicators, you'll have a clearer picture of the market's behavior during the turn of the month and can make more informed decisions. With all the potential volatility, risk management is absolutely critical. So when trading around the turn of the month, price movements can be sharp and unpredictable. So always manage your trades effectively. Manage your risk effectively. Now, here are a few tips. The first is to use stop loss orders. Okay, always set a stop loss to protect your capital in case the market does not move in your favor. Given the volatility, you want to make sure you are not risking more than you are comfortable with. All right. And then pay attention to lot sizes. Okay. Since you are dealing with increased volatility, you might want to reduce your position sizes a bit during this time. Okay. During the time of the turn of the month. This helps minimize your exposure to large swings. And then finally, pay attention to trailing stops. If you are in a trade that is going well, consider using a trailing stop to lock in profits. Okay, that's going to be giving you room to move, right? As the trade is going in your direction and you're trailing your stops, you have a higher chance of riding the trend till the end. And if the trade begins to reverse, you are still going to be in profits. Okay, so this is especially useful when the market is trending strongly. All right, that's going to be in a situation. For example, here we can see that at the start of this was April 2024. So at the start of April 2024, we can see that even the moving average served as a dynamic resistance at that point. Yeah, we can see that we actually had a breakout to the downside around here. Yeah, that was in February. Is that February or okay? This was February. No, this was October. This was October 2024, right? This was October 2024. So at the start of October 2024, we can see that we had a breakout to the downside. The moving average confirmed that, and we had the start of a downtrend. Okay, so sorry, this was November, right? So from October, we had the downtrend began and it continued into November, and around the start of November 2024, we had a retest of this moving average. All right, so after the retest of the moving average, you can see that we had a confirmation that this sell trend was going to continue. You can even see this long bullish candle. Okay, and that would have been a good time to enter a sell to ride this trend, and setting a stop loss is going to be above the previous swing high, obviously. And then for take profit, you can consider using support levels. Important support levels are going to be good points for taking your profits. But while you're riding the trend, you can be trading your stop losses, right? You can, as the trend goes in your favor, let's say initially you had your stop loss around here. After you have this first pullback, you can just bring down your stop loss just above that newly formed high. And then here again, after we had another newly formed high, we just brought down your stop loss further to this point. And then here again, we'll have brought it down a bit, and until we finally had, the price gets to that level where we set our trading stop. So eventually, you're going to close your trade in profits. Okay, at the end of the day, you're still going to be in profits. Okay, so it would have been better off that way than leaving your stop loss in one static position, and in a situation whereby you have a notable reversal, you might end up giving back all your profits to the market. Instead, if you're observing closely, you might find out that there might be a consolidation, like what happened here. There might be a consolidation and then a continuation in the direction of the trend. So in such a scenario, if you notice that a breakout has occurred in the direction of the initial trend, then you can go ahead and enter another sell, or if it is a buy trend, enter another buy. Okay, in this case, we can see that we had a breakout to the downside. We even had a retest, so this would have been a good place to enter a sell and continue riding the trend and trading our stop losses. Okay, now in addition to technical indicators, keep an eye on external factors that could amplify price movements during the turn of the month. Now, geopolitical events, major economic reports, or central bank meetings are often scheduled around this time, and they can significantly impact market sentiment. For example, if there is a Federal Reserve meeting or an NFP, which is non-farm payrolls report, coming out at the beginning of the month, be prepared for increased volatility. All right, so always check the economic calendar before entering trades around this time. Now, these reports can either confirm the trend or disrupt it entirely. So it's important to know when and how they could affect the market. So there you have it. Everything you need to know about the turn of the month, trading strategy, By aligning your trades with increased volatility and momentum shifts at the beginning and end of each month, you can maximize your chances of success. Remember to use technical indicators for confirmation, such as the moving averages, the relative strength index, and any other indicator of your choice. Okay, and also practice sound risk management. It is very important. All right, if you found this video helpful, please give it a thumbs up and don't forget to subscribe to the channel for more trading strategies and tips. And if you've tried trading around the turn of the month before, drop a comment below and let me know how it worked for you. In the meantime, thank you for watching and I look forward to seeing you in the next video.